Bulls in control as the market recovery continues. Nifty gains about 250 points. Global skews are steady. Financial stocks leading the charge. And we do have the Nifty Bank, which is outperforming the gain of 1.5%. Broader market too sees a momentum with almost 5 stocks advancing for every 1 stock which is declining.
Bajaj Finserv and Allianz part ways after 24 years, with Bajaj Finserv and promoter entities buying out Allianz's stake in the life and non-life insurance JV for a little over 24,000 crore rupees. Sanjeev Bajaj tells CNBC-TV18 exclusively that the 100% ownership will give the insurance companies more flexibility to grow. He adds that there will be no leadership change and Bajaj will not look for another partner.
Shareholders investing in PB Health must not only do so for profits but for a purpose. That's the word coming in from PB Fintech CEO Yashish Dahiya as the listed entity invests close to 700 crore rupees in the healthcare foray. Dahiya clarifies that PB Fintech's stake in PB Health will not cross 25-26% for now.
Ircon shares have rallied on bagging a contract from the Meghalaya government. Senco Gold has also hit a 5% upper circuit as promoters have confirmed buying shares from the open market. Berger Paints tells CNBC-TV18 that it has dropped out of the race for Akzo Nobel's India business due to its high valuations.
SpaceX Dragon spacecraft kicks off its journey from the International Space Station to bring 4 NASA astronauts, including Sunita Williams, back home to Earth. The trip, along with complex descent maneuvers, is expected to last 17 hours.
It's a very, very good afternoon if you are a bull and you're watching Halftime Report live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me as always is Mangalam Malu, and it is a very, very good looking screen. We've crossed some important hurdles. We are now heading towards yet another hurdle on the index, which is 22,800. But for now, almost 900 points up on the Sensex, a 270 point gain on the Nifty. You would take that with both hands, considering the market that you've been in recent times. And the broader markets are not far behind as well. Both the mid-cap and the small-cap indices seeing very, very good gains and plenty of stock-specific activity as well within the broader markets. And Mastech is up 14% now, 14.5% actually is up, the top gainer on the Nifty 500 index. Ratnamani Metals is up 10%. Kirloskar Oils is up 10%. And of course, Kirloskar Oils, after that Motilal Oswal note projecting an upside of almost 76% on the stock, that is doing very well for itself. But in our Insight Edge segment, we are putting the spotlight on Senco Gold, and that is also one stock, Mangalam, that has seen a lot of drubbing from its highs. What's the buzz today?
Well, you know, a couple of things before we move on to Senco Gold itself on the market. I was just looking at a couple of data points and the numbers. 48 Nifty stocks are in the green right now. If you look at the top 50 Nifty stocks, top 5 Nifty stocks which are gaining, you have Hindalco, which is the top gainer. Following it is Asian Paints. Then you have M&M, and thereafter is Tata Motors and ICICI Bank, along with L&T. So the top gainers on the index belong to diverse sectors that speak about the market breadth. And similar is the case with the broader markets as well. These are names which have been seeing a lot of drubbing, but now seeing some bit of an uptick. Varun Beverage is up around 5%. Strides Pharma is the other one, up 5%. We're seeing some traction in Zomato. Alongside that, we have Emphasis and PB Fintech as well, all of them gaining. So market's looking fairly good, and in that market it is Senco Gold which is doing good in today's trading session as well. Mind you, the stock has corrected about 70% from its highs, so you know there is no ruling out of some bottom fishing on that. And who better than the promoter who does this bottom fishing? And that's exactly what happened. So, you know, the last couple of quarters, their margins were lower because of a one-time impact on account of the customs duty. This morning, we spoke with Suvankar Sen, and he said that they will, in the fourth quarter, return to their normalized range of 7 to 8% margin itself. And on growth, they've been maintaining that 20% growth guidance. First 9 months as well, they've grown at around 21%. They will continue to do that in FY26. And the other worry for all the jewelry companies is with the fall in diamond prices. Are diamond products selling or not? They said that in the fourth quarter, they've seen diamond sales increase, and gold volumes have grown just 1 to 2% because of the high gold prices. But silver volume growth has been 18 to 20%. So maybe a lot of people substituting gold jewelry for well-designed silver jewelry as well. But most importantly, after the big decline, the company said that the promoters have bought shares worth 4 crore in the open market yesterday, and did say that we'll buy more today as well. The second part we may take with a pinch of salt, but the fact that they did go ahead and bought shares worth 4 crore yesterday is something that we'll keep an eye out on in terms of disclosures that will come to the exchanges as well. So watch out for that. Bottom fishing done by the promoter of the company. Remember, they raised funds via QIP at around 500 odd rupees as well. So even if the stock doubles from here, it will only reach the break-even point of those QIP investors, and it has to triple from here to actually reach its earlier high. So it's a big 70% decline that we've seen already, and now at lower levels, we are seeing some purchase on Senco Gold. In fact, let's go across to the bite that we got from Suvankar Sen this morning itself in our Insight Edge segment.
Things are back to normal. I think that the EBITDAs and the gross margins that we are expecting and what we have been guiding from before is going to go back to the same levels of close to 7% EBITDA and the gross margins back to its own level. So I think that yes, the markets and the investors have been a little jittery and uncertain with all the various things that is happening around the world. From my side, I can only assure that business continues to grow, and fundamentally, it's in a sustainable manner. We will continue to grow 20 stores, and we are expecting a top line growth of 20% this year and hope to continue this 20% growth year after year. If you look at the growth rate, silver, in spite of the increase in value in terms of volume and in terms of value, has grown at a much higher rate compared to gold and diamonds, because I think silver is becoming one of the assets that consumers either for gifting or for lower ticket size investments or buying something for the home. I think silver has going to have a great future with 100 rupees per gram kind of a price that we see, and the potential of silver going up. So while silver is growing at about close to 18 to 20% in terms of volume, as well as a little more in value terms, we have seen that gold has grown to a marginal 1-2% volume growth, but value-wise it has grown like close to 20%.
The management of Senco Gold buying shares from the open market yesterday, intend to buy more today. The stock in a 5% circuit, but as Mangalam highlighted, still has a long way to go before it reclaims its earlier highs. The other newsmaker in today's session is PB Fintech. Now, the stock was down over 10% in around 2 sessions last week, and that is after the company announced its plans to invest around 700 crore rupees in its healthcare subsidiary in the next financial year to expand its operations. Now, the new venture, PB Healthcare, which is co-founder of PB Fintech, Yashish Dahiya will hold 4.2% stake for an investment of 87 crore. Alok Bansal will have a 2.1% stake for a 43.5 crore investment, while Sarbvir Singh, along with Mandeep Mehta and Bhaskar Joshi, will have a stake of around 0.1%. Now, in fact, earlier today, we spoke to Yashish Dahiya, and he said that the primary objective of shareholders agreeing to participate in PB Healthcare must not be profit. Now, there's a 50% chance that this foray will fail. He also added that PB Fintech's stake in the healthcare venture will fall to 25% from the current 33.5%. Now, let us also listen into some excerpts of that conversation.
By the time round 1A and 1B are over, because it's done in 1A and 1B, I think PB Fintech would be down to about 25-26%. Financial return is not the sole driver for Policy Bazaar either. The primary objective of Policy Bazaar is to grow insurance penetration in India, specifically in health insurance and term insurance. I think there is a 50% chance the project will fail. There's a 50% chance it might succeed. If it succeeds, it will be very big. When you talk about PB Health, it is there is an investment going in of about 2,000 to 2,500 crores from various investors. Many of them are pure financial investors, and they have no reason to invest except for the financial return they expect to make out of that. Like in any agreement, you cannot disclose people till the deal is done. I just wanted to clarify, the cash has not come in yet. The cash will come in over the next 120 days, right? Yeah, but without the cash, nothing can happen. No, I just wanted to explain. The money will come in perhaps by July end. So we should have an operation ready, some sort of an operation ready by about December, which is about 5 months after the cash comes in.
All right, interesting. And, as a result of which we saw the stock move higher as well. The management speaking about a bet that they're taking with a chance of a failure. But at the same time, we are seeing, an up move on that stock, because the management does believe that they've limited their risks out here. They are conservative when it comes to capital allocation out here. and the drubbing that the stock has seen already. And they were also sanguine on the growth prospects for the core business. So that's PV Fintech up around 5.5%. We'll take a short break, come back. On the other side, we focus on PVR Inox. That stock is a buzz in today's trading session as well. We'll tell you why.
Welcome back. And there are plenty of movers in the broader markets, as we were mentioning. Paytm is one of them. It's up 7% in today's session. Some news flow as well coming in earlier this morning with regards to a SEBI approval that has come in for the stock, and also the fact that it has also rebounded exactly from where its 200-day moving average was. 200-day moving average was 689, and that is from where the stock has seen a rebound in today's session, 7% higher on Paytm. The other stock that's doing well though is PVR Inox, and that is gaining on the back of a Nuvama note. Vamakshi is here with more details on that. Vamakshi, good afternoon.
Good afternoon, Hormaz. You know, Nuvama has come out with a report on PVR Inox, wherein they've maintained their buy rating, given a target price of 1,765 rupees per share, which is a significant upside as compared to the current market price. Now, the first rationale behind it is the promoter buying. Now, keep in mind that the promoter has bought 29,000 odd shares so far, which is a very minority stake, which is 0.03%. But nevertheless, what Nuvama believes is that promoter buying, even in a small amount, is still a positive indicator for the stock. Now, as far as the calendar year 25 is concerned, it is turning out to be much better off as compared to calendar year 24. Keep in mind that gross domestic box office collection stood at 2,264 crores. This is an uptick of almost 39% in the month of Jan and Feb, and this largely was driven by Chhawa. The month of Feb 2025, in fact, was the highest grossing month for the industry post the pandemic, so that bodes well. And this comes at a time when the audience is getting very selective about their preferences. Only the high quality content that is coming through is being rewarded in the current urban consumption slowdown that is underway. So overall, this bodes well for the company. Now, quarter 4 is the numbers will likely come out next month. Now, keep in mind that quarter 4, Nuvama believes could actually be much better than what they were earlier anticipating. Sikandar is also slated for a quarter 4 end release, and this in turn could also drive some opening numbers that could be very strong and which could get added to the box office collections in the quarter gone by. Now, Hollywood content pipeline also looks very strong in their opinion, with Thunderbolts as well as First Step. So overall, given the promoter buying, the kind of gross box office collections that we're seeing, they're quite bullish on PVR Inox.
All right. So good box office lineup. At the same time, promoters buying from the open market. Does that, take away from the woes, the long-time woes that PVR Inox has been facing? Something we'll keep an eye out on. Currently holding with a gain of 4%. Take a short break, come back. Sachidanand Uttekar of Trade Bulls will join in with some trading strategies. What a day it's turned out to be so far. 250 points on the Nifty, 850 on the Sensex, Nifty Bank, and the broader markets doing a lot better. So perfect time to get you an update on what the F&O markets are penciling in. This morning we had told you that, there is an outside chance of the Nifty breaking out, and that's where a lot of call writers or call buyers were positioned at around that 22,850 mark itself. So that call is making money for a lot of people. But the important part is what from here. Now, if you look at the Nifty holding around that 22,750 mark, the Nifty Bank doing a lot better. Both of them have actually, underlined two factors. One, the lower level for the market has been protected. And every time that happens, the broader markets do a lot better. So if you look at, the advanced decline ratio, this morning opened with 1,300 stocks in the green, went up to 1,600 stocks. And this is now like a parallel train track without any movement. The green line much above the red line, and that distance has been maintained. So that's positive. The second part is that we are seeing both the Nifty and the Nifty Bank having conquered the 20-day moving average, and they're fair distance from here. So unless there is a big decline from the highs, these are likely to close above the 20-day moving average itself. So that is a positive. But now let's look at what's the other thing that is fueling this rally. A large part of this is also short covering in calls. So 22,500 call, there you see short covering. The premium has surged by 138% rather, 181% rise in premium for the 22,600 call as well. So those writers have been caught on the wrong side, and the 22,700 call writers as well have been caught on the wrong side. While this call short covering has taken place, a lot of put writing has come by as well. So the 22,700 put writers active for a premium of 75 rupees, telling you base for the market has moved higher to 22,600 thereabouts, which is closer again to the 20-day moving average. 22,600 put writers as well, fairly active for a premium of 50 rupees. 22,550 to 22,600 is where the support for the Nifty after this up move lies. The important part, however, is that how much higher can we go from here? Chances are we might get into slightly overheated zone. Why do I say that? Because one, put call ratio from 0.7 has moved to 1, and now as we speak, the kind of put writing that we've seen has taken the put call ratio to 1.3. Typically, it indicates overheated zones at around 1.25 to 1.3, so we are higher end of that zone. And secondly, one would like to see the wicks fall a lot more with the kind of market up move that we've seen. The market's moved higher by about 0.1%. Yesterday as well, there was a 101 point rise on the Nifty. But now if you look at the India VIX, that hasn't fallen by much. It's fallen just by about 0.35%. So that indicates that maybe at lower levels, we are seeing some sort of put buying as well in the form of protection. So we'll keep an eye out on that. And a bunch of stocks are on our radar. Asian Paints, which is up around 2.5%, was under pressure yesterday. So some short covering out there. A couple of stocks, we're seeing some, OI additions on the long side as well. But Manappuram Finance, that's the interesting one, where the open interest is now 82% of the threshold. If it falls below 80%, it may exit F&O ban after being an F&O ban for an extended period of time. So we'll keep an eye out on that one.
Indeed, you have to keep an eye out on that one specifically versus board meeting as well. The stock being in the F&O ban for a better part of the series is now looking to come out of the ban. But Sachitanand Uttekar of Trade Bulls is joining in now on the show for a quick chart check and some trading ideas as well. Sachitanand, good afternoon. Thank you for joining in. Mangalam was just mentioning that it's now become a parallel train track, and when the train tracks are usually parallel, the train moves faster. Do you expect the train to move faster towards 23,000, or do you expect some consolidation around 22,800? And your stock ideas as well for the afternoon.
Good afternoon, Hormuz. Good afternoon, Mangalam. And absolutely bang on. I think, last week we discussed a very similar setup wherein we highlighted the base at around 22,400, 450. And that base was very prominent, being the fact that it managed to, maintain its closing above its 5-day exponential moving average. This week we have already seen a breakout now above its 20-day exponential moving average when it comes to Nifty. And the move now looks very dynamic. In fact, last week we were of the opinion that the eventual move could be towards 22,900, 23,040. But the way, there has been a sectoral shift, the way the constituents are behaving right now, it looks like, the Nifty is well positioned for a dynamic move towards its 200-day exponential moving average, which is placed somewhere close to around 23,450. And this move may unfold during this particular series itself in case that 23,040 mark is crossed, in this particular week itself. So I think the case is very strong until unless we don't see the Nifty again, closing below that 22,500 mark. The potential for this particular expansion is quite high, and there would be a very strong momentum play which we may see in the days forward. The immediate stop loss for the trade is placed somewhere close to around 22,630 on a closing basis. Any declines towards 22,700, 740 would again present a good opportunity to create fresh long positions. From a short-term perspective, I think 23,040 would be the first target. But eventually, I see this particular move unfolding towards 23,400.
All right, 23,400, good one. Sachidanand, remember your call from around 22,400 itself. Now, 1,000-point uptick is what you are seeing from those levels itself. We've done about 230 or 300 points from the levels where you went, you suggested a long on. Individual stocks, if the market has to go to 23,400 eventually, has to be some of the heavyweights, maybe HDFC Bank, maybe Reliance. What are you betting on from here?
Well, Mangal, last week we highlighted the setups for Nifty Bank, the constituents there, and the capital goods which were turning into that positive zone. I think the focus is on the auto stocks, which are presenting a very good reward to this opportunity. If you look at the Nifty Auto Index itself, it has been showing a ending diagonal price pattern, and this usually occurs during the bottoming out phases. And this similar structure is very well evident in stocks like Maruti and Tata Motors. So I think the focus from here on should be on the auto stocks as well. We have already seen some good move in Tata Motors since last week, but if you look at the overall structure, the stock looks very confidently positioned. It took a very strong support near its 200 weekly exponential moving average, which was placed around 650. And post that, we saw very good consolidation towards 670. Now, I think the way its weekly RSI is shaping up, there's a positive crossover there, which is a good sign of directional momentum play, which we may see in this particular series itself. And that's why we are recommending, building long positions here in Tata Motors. The stop loss for the trade should be placed at around 652 on a closing basis. And we may see a dynamic move towards 740, 810.
All right, Sachitanand, thank you so much for sparing time, joining us with your views on the index and on specific stocks as well. We take a short break. On the other side, we get you excerpts from our mega CNBC-TV18 exclusive with Bajaj Finserv Sanjeev Bajaj, as Allianz is set to exit the Bajaj Insurance joint ventures after 24 long years. Stay tuned, we'll be right back. Welcome back. It's still holding on to some gains, but slightly off the highs is the index. Is up, still holding on to gains of around 200 points now. 22,720 is where the index is. So still a good day so far for the market, since facing some resistance at the 22,800 mark. But as Allianz is all set to exit the Bajaj Insurance joint ventures after 24 years, Bajaj Finserv's chairman and managing director Sanjeev Bajaj exclusively told CNBC-TV18 that they'll be investing 24,180 crore to buy back the stake from Allianz. He also spoke about their plans to list the insurance business, leadership changes in the company, and a lot more. Listen in.
It hasn't come as a surprise. This was anticipated. It's also been a fair amount of an overhang as far as the businesses were concerned. But finally, this 24-year alliance, this 24-year joint venture partnership has come to an end. I want to understand from you, to start with, Sanjeev, how prepared are both businesses for this exit at this point in time?
Shireen, good morning. And let me start by saying that this has actually been a great win-win deal for both partners. Both partners have reinforced their strategic intent for India, but with different paths. And from Bajaj's point of view, the Bajaj Group reinforces its focus in India on the insurance business at 24,180 crore that we are going to be investing to buy the 26% stake in both our insurance companies. I believe this should be the single largest investment in the insurance space ever in India, and one of the largest investments in the financial services space. Once again, reinforcing Bajaj Group's commitment and belief in the India opportunity. As far as both our companies are concerned, these are managed by very well qualified boards and by senior teams that have been with us for very long periods of time. And hence, we see no change at all at any operational level. Our partnerships will continue to be the same. Our distribution continues to be the same. Products are the same, so no change on the ground.
So no change at all on the ground as far as operation is concerned, Sanjeev. But let me ask you whether you are going to scout for another partner, whether that is at all something that you would like to even consider at this point in time, or do you believe that going solo now after this 24-year arrangement is the preferred route for you?
We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo, and most of those businesses have actually even done better.
Okay, so going solo, that is the route forward. That's the road ahead. Let me also ask you about the possibility of listing, Sanjeev, because this has been the regulator's nudge to industry as well, that large insurance companies need to consider a public listing as well. With this eventuality out of the way now, is that an imminent possibility for you?
Well, as you mentioned, Shireen, correctly, the regulator has been engaging, especially with the larger, older insurance companies, to talk to them about the possibility of listing, to put a glide path and timelines towards that. This is something that has been taken up by both our boards as well, given the significance of this current action with Allianz exiting the insurance companies. It will take us some time for the rebranding once we get all the regulatory approvals, etc., etc. And as a result of that, the board at a suitable time will consider the nudge, as you said, from the regulator and put out a path forward.
You know, a little bit about what happens now as far as Allianz is concerned, and I know that you don't really have a say in that any longer, but what we did see from Allianz in its press release last night was that it's going to use the proceeds to make strategic bets in India and look at opportunities in India. I just want to understand from you, is there any kind of a cooling off period that's been factored into this arrangement, into the agreement between you and Allianz as they exit?
And the answer to that, Shireen, is that once the first part, the first tranche of the shares are bought by Bajaj, post all the nationally regulatory approvals, the cancellation of the JV and stuff, we release Allianz from the non-compete, so then they are free to go ahead and get into binding agreements in India. This was their desire and one of their asks, and we completely understand that as a large player. And that's why I think the discussion, the negotiations have been such that it's created a win-win on both sides.
And just to understand that, so you're saying that once that 6.1% is done with, Allianz is free to tie up if it wishes to with any other Indian insurance company, any other Indian promoter, if it so desires?
Very much so. Along with that, technically the JV agreement falls away, the name change happens and stuff, but yes, in effect.
You said that there's unlikely to be any operational change at this point in time, Sanjeev. But, you know, it has been a partnership that's gone on for over 2 decades. So I would imagine that there will have to be a fresh roadmap of some sort that you draw up. And I'll ask you this in the context of another eventuality, which is, you know, on the anvil now. Rajiv Jain, you know, 31st March is just around the corner. What do you believe is likely to be the role that Rajiv is likely to play as far as each of these businesses are concerned?
So firstly, as I said, a board of both the insurance companies controlled by Bajaj has been running the business for over a decade, and there is going to be no change, I can tell you, on the ground. Day-to-day competitive activity continues, but there is going to be no significant change. As far as Rajiv Jain is concerned, we have a board meeting coming up later this week, and Rajiv is fully committed to the group and the business, and the board will evaluate. As we know, his term comes to an end of March. The board is evaluating next steps, and you will hear about it soon.
The government and the regulators nudge as far as the bank assurance side is concerned, and the reliance or the over-reliance in the view of the government as well as the regulator on bank assurance. How do you see that impacting the sector, and what do you believe it could potentially mean as far as you're concerned? Do you imagine being a net beneficiary if the wheels were to be slowed down on that front?
Very clearly, we will be a net beneficiary because we don't have a exclusive tie-up with any bank. But having said that, our general insurance company has over 250 bank tie-ups, the largest in the country. Even though we are not promoted by a bank, our life company has, again, more than 50 partnerships with banks, and that's growing. But yes, as we open up distribution, it will naturally end up being beneficial to companies like us, which is not part of a banking conglomerate. I believe the interest and direction towards this should be based on what is right for the customer. Because on the other hand, you have also banks, they have their own ownerships, they have their own focus areas. So while in my own selfish interest, naturally as it opens up, it's great for us. If it's good for the customer, and I believe it is, it makes sense to open up. And most banks have opened up. There are just a few that are still closed. In addition, what's important is for us as an insurance company, we have de-risked distribution. So if you look at the business we get from banks, what we get from agency, what we get from direct channels, our own proprietary team is very well balanced. And this is something we have done in the last 7 or 8 years so that we are not reliant on any one large partner. Doing that makes you unnecessarily dependent.
Before I let you go, I just want to reiterate that no leadership changes at either business at this point in time. Is that what you're confirming to us? And two, you spoke about a decadal opportunity for growth. Again, leave us with some color of what the decade ahead could potentially hold.
So clearly no leadership changes in the insurance companies. The same senior leadership continues and is committed to building the business going forward.
Interesting conversation there. Remember, you can catch the full chat at 5:30 p.m. only on CNBC-TV18. So that's Sanjeev Bajaj. It's a big CNBC-TV18 exclusive after the deal that took place. But interestingly, he did say that later this week there is a board meet where the future of Rajiv Jain will be decided. And remember, Nimesh, just a couple of days ago in his special D-Street chatter had mentioned that, there could be a binary event for Bajaj itself. He joins in on this. Nimesh, this is a Value Plus segment. You've added a fair amount of value by whetting our appetite about this binary event that has happened. And what happens next?
So, Mangalam, just to put into perspective what you heard from Sanjeev Bajaj, very clearly confirming that Rajiv Jain is going to continue with the group, which is the Bajaj Finserv and Bajaj Finance. So that's one, there is this one big confirmation that he's not going anywhere and he's going to continue with the group. Interestingly, he also added that in the next 2 days, there is a board meeting and the board is going to decide on the next fate of Rajiv Jain. Now, Morgan Stanley actually put out a note yesterday and they put out a couple of scenarios in which how the stocks will react with regards to Rajiv Jain. So his term ends on 31st of March. So the clarity has to come before that. And now we know that there is a board meeting scheduled in the next couple of days. The first scenario is that that Rajiv Jain continues with Bajaj Finance. In that scenario, Morgan Stanley believes that there could be a further 5 to 10% upside on the stock for Bajaj Finance, even from current levels. Stock has outperformed, but there is further legs if Rajiv Bajaj continues. The second scenario is that while he continues with Bajaj Finance in some fashion, he also takes up responsibility in Bajaj Finserv. Even in that case, the possibility of a 5 to 10% upside remains for Bajaj Finance. The third option, which is a very less likely according to the Morgan Stanley note, is that he gives up his role in Bajaj Finance and only takes up a role in Bajaj Finserv. In that case, the stock may see a 5 to 8% correction on the downside, if that is the case. So, that's the reason why I believe, it's a binary event, so to speak. Now that we have a clarity from Sanjeev Bajaj that over the next 2 days, there is a board meeting scheduled and Rajiv Bajaj is going to continue according to Rajiv Bajaj. So, one, there is a clarity now that he's going to stay back with the group. The only thing which we need to know now after the board meeting over the next couple of days is what exactly role is. And as I said, if he continues with Bajaj Finance and he's taken up additional role in Bajaj Finserv, it will be positive and stock will react positively. Only if he leaves Bajaj Finance and only goes to Bajaj Finserv, then you might see a negative reaction on Bajaj Finance.
Indeed, and it's the best performing stock on the Nifty so far for 2025. Nimesh, thanks a lot for that. All eyes on Bajaj Finance for the next couple of days ahead of its board meeting to determine the future of Rajiv Jain. We take a short break, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away, introducing the all-new CNBC TV18 app, on which Mangalam is already on, where you can get all the financial world updates on your fingertips. You can download the app from the App Store or the Google Play Store, scan the QR code on your screens as well. That will take you to the app as well. We take a short break. Back on the other side. Welcome back, and still holding on to some gains is the Nifty, still off the highs of the day, though is continuing to cool off from that 22,800 level is the index. But the broader markets, though, continuing to hold on to gains. The Sensex too is down almost 200 to 250 points from the highs of the day. So bit of resistance, some bit of profit booking coming in at higher levels after the moves that we have seen in the recent times. We take a short break here on Halftime Report. On the other side, Manisha Gupta joins in with Rishi Rathani, the Chief Business Officer at MCX. Stay tuned.
Welcome back. Joining us now is Rishi Nathani. He's Chief Business Officer at MCX. Rishi, hi. Thank you for joining in. And good days, clearly, as gold hits all-time highs. The volumes on MCX have been rising. Would be nice to understand on what percentage of overall volumes really is gold.
Thanks, Manisha. Gold is performing and so is silver. But having said that, all commodities on MCX are doing well. So all segments, whether it be bullion, energy, industrial metals, they're all doing well. So gold, we've seen certain highs on 28th February. We saw the gold large option doing an all-time high, and on 24th February, the mini doing an all-time high. So the bullion segment, to answer your question, comprises of around 15 to 20% of our overall volumes.
As you said, and we've been getting those messages from MCX all the time on how futures and options are doing really well. We've been hitting record highs there. How is futures growing, and what is the kind of very strong growth that you would say has been seen in case of options there?
Well, both segments are growing in this current year as compared to the previous fiscal. Our futures have grown 37% and options have grown at 114%. So giving a blended growth of about 101%.
Rishi, also, when you look at newer product launches, I mean, I know I keep asking you that question over and over again, but we haven't seen something happen for a long time. I remember having a conversation about electricity futures and single commodity weekly options as well. So what really is coming in? What can we expect?
So in the new fiscal, I'm sure you will see various new product launches. And as soon as the circulars are out, we can come and discuss with you. But we do have a robust pipeline of products which we plan to bring out in the market. And as and when we get regulatory approvals and we think it's apt to bring it to the market, we will definitely bring it up.
Rishi, also a new CEO has stepped in with a change in guard. Is there a change in strategy on ground?
Well, MCX continues to focus on growth, and that is what we plan to do.
Rishi, also a lot of commodity exchanges are now talking about equities vis-a-vis. There is a strong growth that we've seen across asset classes. Is MCX looking at that?
Well, I can't comment on that, but all I can say is we are completely focused on business. And as and when, wherever we get opportunities in the commodity space where we are right now, we are exploring that. For the others, I cannot comment as of now.
Rishi, in the recent past, we've seen stricter restrictions from SEBI come in for F&O norms. Has that in any sense impacted MCX? Have you seen more volumes, more activity happening because of that too?
Well, as far as I understand, those have been for the equity segment. So we've been rather insulated from all that, and we continue to focus on our business. So I don't think that our business would have much to do with the equity side.
But have you seen those volumes, that activity happen in commodities? Would you say some of that, yeah?
Yeah, so see, point being that volumes in commodities have been growing steadily, and that is what we've been seeing now. Whether you can attribute it to restrictions in equities, I wouldn't say that is fair, because commodities had anyways been growing, and that is what we continue to see, the growth in commodities, especially because of the global uncertainty and geopolitical issues and the need to hedge more and more. So I think that is the reason why we are growing.
Rishi, also, since now the technology's changed, everything seems new, do you see that impacting numbers in this quarter?
Well, yes. So the technology platform has stabilized to a very, very large extent. We are seeing, because of that, the ability to handle business in a better manner, and members also getting a pretty seamless experience. So I think, that would also help our overall business growth to be handled by the technology platform in a very seamless manner.
Point taken. Rishi, as always, thank you so much for joining in and promising us that the new financial year will perhaps bring in more products, more instruments for the commodity players there. With that, that's all the time that we have on Halftime Report. Business Lunch will take all the action ahead.